Hello, good evening, everybody. How's everyone doing? How was your weekend? Hope you enjoyed it. We had some awesome summer temperature here in Ottawa, Canada. I most definitely took advantage of the weather. We're just gonna wait a little bit to get some people going into the stream. So for this week's market commentary, I'm first going to start with the dollar index, right? So I'm gonna map out, my ideas around USD, strength or weakness, points of interest, overall direction, so that we can use that information on the most major pairs, right? So GU, EU, AU. And if you would like me to analyze a pair, outside of the ones that I'm already doing, please just put it in the chat. I would be glad to do it. So a couple weeks ago, we did NZD-JPY. NZD-JPY. Not a pair that I trade, but I did, of course, did an analysis on it, marked out some points of interest, and you can see how things played out. Quite nice. And then last week we did gold. We had a really nice setup right after the market commentary into this point of interest where price, hit the first point of interest for short targets. And ultimately, I was expecting price to push a little bit lower. Well, it got there close. However, it didn't dip anywhere below this 50% or equilibrium point from this huge impulse, right? So I wasn't looking for any buys at that point. And you can see price now kind of extending to the upside. So for this week, we'll start with the US dollar sentiment. Jmaina, hi, what's your view on GU? We'll definitely get to that. Let's get started straight away then with the US dollar index sentiment. Okay, so just like I've been saying in the last, few weeks, US dollar is extremely weak. Some people say that it might be undervalued. However, I don't like to speculate and guess on what's going to happen next. I just look at, what's been going on and what's price telling me. So we're clearly in a bearish structure, right? We started breaking these structure points. Yes, we have tapped into this area of supply. However, there's no sign in most recent price action that we're in bullish market structure. Okay, so we're still bearish. So that's one thing here on the daily time frame that we're looking at. We can clearly see that last week we dipped down, tapped into about the equilibrium point, okay, here of this daily order block or area of demand. Okay, so possibly we could start shifting market structure, move to the upside. However, we first need to hold this low, of course, and then start breaking these highs. But these highs would just mean a minor break of structure, right? It wouldn't be a shift in market structure. Okay, so this is a minor point of structure. Let's point it out so we don't get confused. Oh, okay, minor structure point. And then, of course, this up here is the major structure point, since this is the origin of the highs from this move to the downside, which broke this structure, right? Hence why we have daily structure high up here, daily structure low. And notice where, what we have at the previous daily highs or structure high, apologies, right? We have a set of equal high, meaning that we have, some sell stops up here, or sorry, some buy stops. So there is most likely, a liquidity pool up here where price will target if we do, look for upside. Okay. Let's continue on, I want to identify points of imbalance. Okay, so first point of imbalance, we have Thursday's low of the candle, right? So if price is going to continue to the downside with this momentum and this high being respected, price should tap, 90.587 to rebalance the price and continue to the downside. It could go slightly higher and then continue down. However, this is just a point of interest that I'm going to highlight here. So we have daily imbalance. Okay. There's no order block up here. Okay. This is no order block. I'm just identifying imbalance. And so before we go to the 4-hour time frame, I'm going to identify another area of imbalance, which is up here. So if we do start breaking the minor structure point here, okay, we can eventually go back up to 91.173. Okay, daily imbalance. Boom, boom. All right, 4-hour. We have, this was clearly a draw on liquidity on the lower time frames. This is something that I was sharing in the free Telegram group. So if you guys aren't part of it, the link is in the description. It's totally free. And every morning, 3, 4, 5 times a week, depending on the week, right? I'll share, my point of view, my analysis on different currency pairs. And I tend to take a look at the US dollar index just to give, a daily sentiment or, right, for the dollar. So this was something we were looking at, right? You can see that there was a point of interest over here, 4-hour order block refined with the 1-hour order block. And of course, we had a set of equal highs on the lower time frame, and this seemed like this was a drawn liquidity to push price lower. However, there was no confirmation at all, but just the idea that we had was price from over here would come and fill this imbalance, right? This price inefficiency, and kind of continue with the bearish momentum from this order block. Okay, so exactly that has been happening. So we're going to continue on with that, right? Now notice where we have the daily imbalance here. Okay, we can now identify an order block from here, right? And the reason why this is an order block, you guys aren't really aware of, the rules behind a valid order block or a valid supplier demand point. You need an impulsive move that breaks structure, right? So we can clearly see this isn't a 1-hour point of structure anymore. This is an actual break, okay, a bearish minor point of structure in this case. Okay, it's a major point of structure on the 1 hour, and we'll get to that once we refine to the lower time frames. Okay, not only that, we have imbalance over here. We have, the daily imbalance too. So it's highly likely that price will move up to these areas and price will be sensitive over here. Okay, this is no signal saying that we're shorting there. We don't trade the DXY, right? It's just gives us an idea of, if once price reaches this point here, we then look at our major currencies, right? Our USD denominated pairs, and take a look at where they stand. Are they at point of interest as well? Yes or no? And if so, then we can make a decision, right? So if we're expecting momentarily or interim strength in the USD to rebalance the pricing, and then from there start pushing lower for a weaker USD, then we take that in and we translate it onto a USD denominated currency pair that we trade. Okay. So this, I'm gonna remove the drawing here. And this was a drawn liquidity confirmed. So if price wants to go back down, it should respect these highs for sure, since this was the drawn liquidity. So we're not scared to get purged, right? The purge already happened above these highs. So let's go down to the hourly. Okay, we can see things much more visibly now on the 1 hour time frame. Okay, you can clearly see set of lows. This minor break of structure on the 4-hour is an actual, a valid major break of structure or a structure point break, since from these lows, right, we had an impulse to the upside which broke, these highs here, and then price broke this structure. Hence why this order block here on the 4-hour is a valid area of supply. Okay, now what we can do is refine our order block to the 1-hour. Okay, I'm not gonna draw a box. I'm actually just gonna refine by identifying where the imbalance lies, which is over here. Okay, H1 imbalance. Oh, exclamation mark. H1 imbalance, and 15-minute, pretty much the same. Okay, so we do have where we have the 1-hour imbalance, we have exactly that imbalance there. You can see it. Okay, and anywhere above it, price seems to be quite efficient. There seems to be just a little imbalance over here, which we'll identify just for the sake of it. So M15 point of interest, which is within the 4-hour order block, right? So without going too low on time frames, right, we're just looking at the sentiment on the dollar index, and what we're thinking of is a pullback here on the weekly candle, right, to reach these areas. And of course, if these highs are respected, price should continue down to first break these lows and create potentially that lower wick on the weekly time frame, and then eventually target the daily structure low over here. So we're looking for interim strength in the US dollar, but overall weakness. Okay, so let's jump on the GU chart. Okay, price seems to be quite efficient to the upside, right? Mitigated this daily imbalance. We look lower here, price came back down to rebalance the price and potentially continue with this move to the upside. Some people might have seen this as a break and retest from this level of resistance. However, the way we read the market, this was a rebalancing. This was just rebalancing the price, right? And we're seeing a reaction off of it. This doesn't mean price is just going to continue up. There is still room, to rebalance lower. Okay, we have this daily imbalance that has been identified from previous weeks. Okay, we still have our previous weekly high and low from the last market commentary. I believe I moved the daily structure low to here, and of course the daily structure high is up here. However, I'm just gonna keep my eye on the weekly structure high and these order blocks here, right, since we already tapped into it. And then we have this daily imbalance. So if we're looking for on the dollar index interim, USD weakness, we could potentially see, sorry, this is not weakness. We could potentially see, sorry, I might have said that wrong. Okay, so we're looking for interim USD strength, right, to then see overall weakness. So by going on GBP USD, right, what are we looking for? Just based on that daily time frame, we're looking for interim weakness, strength, sorry, for overall weakness, right? So this is the idea as well. We would really love to see price rebalance, the imbalance over here. And if we look at this based on our rules, right, we want to buy or sell at a discount. Okay, so we clearly see our equilibrium point is right here based on this impulsive move to the upside, which broke this previous structure point. Anywhere below here is of interest for us, right? So anywhere above it, it's a premium price. It's not ideal for swing points, all right, or for swing positions. So you can catch, scalps or intraday trades from there, no problem. But if we're looking for, holding positions or big swing moves, we're looking for discounted price, right? Let's see on, let's keep this drawn on the daily, on the higher time frames, or just the daily, okay? So it's not in the way. Okay, so we can see how price tapped into this psychological price point, 1.40, rebalance the daily imbalance, and then move to the upside and rebalance this price inefficiency. Okay, there's nothing to do here for me. Okay, we're still, yes, I did mark out this break of structure from last week. However, it's just a minor break. Okay, it's not a shift in market structure at all. So bullish, minor bullish break of structure. What we're seeing here, this impulse here, right, broke this point of structure, and we could potentially move a bit lower. However, price seems a little efficient here and even below here, right? So we did have that imbalance on the daily. By the way, for those who are watching, I'm doing this market commentary live, and I didn't take a look at the charts over the weekend, or I didn't prepare for this. So I'm kind of building my bias as well as I'm doing this. Okay, so from the looks of it, maybe price won't fill this daily imbalance, because if we look any lower from this 1 hour block, price seems quite efficient, right? So we'll see how price reacts, right? Maybe it'll, like, starting the week, maybe price will push higher and break this point of structure, right? So then from within this impulse here, we're going to look for points of interest for a continuation to the upside, or maybe push a bit lower. We don't know, right? It's still extremely early within the week. We're just trying to build, you know, our directional bias on most of the pairs we're trading, right? And in this case, a lot of them are denominated by the USD. So on the 4 hour, there's no point of structure really. So what we can see is on Friday, so Thursday and Friday, we had a set of equal high here. Price ran that liquidity and pushed lower, breaking, you know, this structure point. Hence why we could see interim, just like in the dollar index analysis that we did, we can potentially see interim strength on the US dollar for ultimately having a weaker USD throughout the week or the next couple of weeks, right? Our bias has been for just a weaker US dollar in general, right? We can clearly see the impulses for a weak USD has been much greater than the retracement or the consolidations, right, on that against that currency. So let's jump down to the 1 hour. Okay, you can see how price has been extremely efficient, highly corrective to the upside. Okay, whereas this was actual momentum on Wednesday, right? Thursday, not much movement, and then Friday, end of the week, highly corrective move to the upside. So we could potentially see, you know, another impulse to the downside, tap into this daily imbalance, right? This is our point of interest, and I believe it's going to be the only one until, you know, there's further price development, you know, in Asia, or well, mostly like London and New York session, right? For those who have been following me, I'm not super active on Mondays. I don't like to trade Mondays unless there's a, you know, grade A trade setup, because I like to, you know, let Mondays kind of set up for the week. It gives so much more information to take in. I don't rush into any trades. I don't rush into anything. Some weeks I don't take any trades. Some weeks I take one. Just like last week, we took one trade on GJ. We pinned it, shared it in the group. Some people tagged along with that trade. And that was the only trade we took for the week. We grabbed 3 Rs, right? The week before that, it was an extremely slow week. NFP and all that. We just broke even on 2 positions, and that was it. The week before that, we caught 8 Rs on a GU buy position, right? So being patient really rewards you. So we can see how price reacted in this area of supply where we had liquidity being created, above these equal highs, price running that liquidity and then creating bearish market structure, right? So the bias so far has been just, potentially move slightly lower from, the Thursday low, tap into this imbalance. However, we're just going to keep an eye on intraday dealing ranges, right? So we'll see how Monday kind of prints, and then Tuesday. Wednesday, Thursdays are usually the better days to trade. They tend to be the bigger days, or the bigger moves, right? It's not usual to see Mondays with big swings, but you can see how Wednesday, right? Wednesday, big move. So Wednesday, Thursday continues with that Wednesday move. Awesome. If we look at previous weeks, it's been a bit, funny how like Fridays and Mondays have been extremely violent in movement. However, I think this has just been something since the new year, okay? However, you can see over here, Wednesday, big impulse breaking structure, right? The week before that, Thursday, right? Big impulse breaking structure. So Wednesdays, Thursdays are usually the days that are more predictable, okay? Mondays, Fridays are somewhat predictable. You know that we have, pullbacks or, profit taking, but it's not always the case. So I just find it a little unpredictable, especially Mondays, right? You don't know what Monday's what's gonna do. Marwan will check out AUD and ZD for you after this, okay? There's really not much to look at, honestly, on GU. Gmaina, if you're still in there, I apologize. I'm not the type of person that's going to force anything on the chart. There is absolutely no clear or clean impulses or imbalance or order blocks, for a matter of fact. Okay, we could potentially just mark out this point of interest here on the 1 hour. All right, which is somewhat the point of origin of this huge impulse to the upside, which lies below this daily imbalance. So let's mark it out. Okay, there's a little bit of price inefficiency below it. Let's go on the 4 hour to see what that looks like. It's within this wick here, okay? So we'll just leave it as a 1 hour order block. Not very strong. However, we know we have the daily imbalance above it. Okay, so let's just keep those structure points. Right, remember we have this daily imbalance here, which we would like to aim to fill at first, and maybe we can push a little bit lower and tap into this 1 hour time frame to push higher. However, knowing my trading approach, prices approaching this in a bearish structure point, you need, sign that we're gonna start pushing up, right? If we can see equal lows being created or something of that sort with a drawn liquidity and then a shift in momentum, not just a shift in market structure, a shift in momentum, then yes, we can consider, looking for buys along the way up to continue with this overall up move or bullish market structure, right? We don't rush into trades. We don't have to rush into those trades. We know that even if we miss this big impulse here, there is going to be multiple different opportunities to tag along that trade, right? So just wait for price to come to you rather than rushing that whole process. So this is it for GU. Let's go into AD and ZD for Marwan. I don't have it in my watch list. But before we do that, I'm just going to point this 139, 400. This is my point of interest, okay? So AUD and ZD, AUD and ZD. Okay, the chart is clean, but just in case, I'm going to remove all drawings. There's absolutely no drawings. Perfect. Okay, so this is going to be an actual top-down analysis. So Marwan, this is for you and for others watching. So we'll start just like we always do on the weekly time frame. take a look at this. So we have bullish market structure. We have a weekly high. Actually, that's not the right tool. So you have the weekly structure high. Okay, weekly high, structure high, and then weekly structure low. Okay, and the reason why I'm marking these out, because this was the last impulse which broke structure, and that was a bullish break of structure. Okay, so let's mark this out. There was this high. This was a bullish break of structure. We'll keep this visible on the higher time frames. Okay, and just to measure this, this is clearly a retracement, right? Within this impulse. So this is a retracement. Just want to measure it to see, because we seem to be in, you know, our favored fib zone. Okay, so we're tapping into the 61A and 786 area. We can clearly see that, you know, within this impulsive bearish candle, another impulsive bearish candle, we see somewhat of, you know, momentum potentially shifting in direction. So I wouldn't be fooled by just one candle looking bearish, right? It's tapping into these wicks where there's liquidity. So let's just be patient and, you know, trust in the overall structure that we have here, right? Notice how I'm not looking much, you know, in the past. However, I do see somewhat of like equal lows. Let's do something real quick. So we have, you know, a set of equal lows here or over here with a big run on the liquidity below this previous low. Okay, and price shifting in market structure by breaking over here. So this is a retracement within this huge impulse, and this is potentially, you know, that next wave that's going to break these structure points, right? But this is too speculative. We're not position traders. However, we have, you know, the overall structure just over here, a bullish. We're at a discounted price, right, in our favorite fib zone, and we're overall looking for buys. However, our intraday positioning might be slightly different, right? So let's take a look at something. I'm gonna draw this out. Okay, so this is our favorite fib zone. Jamaina, you're welcome. There wasn't much on GU, to be honest, but if you're in the Telegram group, I'll update GU if there's something interesting, right? So depending on how today forms, we'll see if there's something we can play with, okay? It's one of my favorite pairs, so... where did it go? Okay, so I just put in a box here to identify that we're within our favored fib zone, okay? So AUD/JPY, I find it really interesting to look at those pairs that I'm not used to looking at. Some of them look really nice. Okay, let's just make these visible on the higher time frames. Okay, so this is the daily time frame. We clearly have bearish market structure. Okay, so within this weekly up move, we have a corrective move and we're still bearish. Okay, so let's mark out significant structure points. Okay, let's be technical, extremely technical. So we have this. So we have this high, right? This impulse to the downside creating a low, which broke this structure point, right? Then we had a retracement, created a high and a new low with this impulse to the downside, right? So from that, we can identify this as our weekly structure high, and then this our weekly structure, our daily structure low. I think I'm saying weekly, but we're daily, right? So daily structure high. Now, before you say, but we're waking above it, blah, 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 Just give me a second. Let me mark this out and let me explain why. Okay, daily structure low. Okay, so based on my market structure reading rules, right, I go from wick to wick and I need candle bodies to close above those structure points, right? There's no candle body closing above. There's no candle body closing above. What does this mean? This means that we're running liquidity, right? We're tapping into areas of liquidity clearly above this structure point where people would have trail stops or buy stops above and price is pushing lower, right? So we could potentially start seeing deeper moves to the downside, right? We're still quite bearish, right? However, it's interesting to see that we tapped into the liquidity not once but twice, and price really is struggling somewhat to break these lows. So it's a matter, I think it's just we're in a higher time frame range. So let's take a look at the lower time frame, see what we can do in here, but it's quite interesting, okay? Notice as well on the daily time frame, right? This is mitigated, right? No imbalance on the daily. Okay, so I'm just gonna identify this as mitigated, and you know, if you're looking for an area of demand, there is none because there is no break of structure, but we might see something on the lower time frames. Okay, let's drop down to the 4 hour. I want to look quickly below these lows here. Is there any price inefficiency? Not much. Okay, there is this little price inefficiency here, but to me this is quite balanced, to be fair. Okay, there might be this area of liquidity that could be of interest where potentially we can tab below. I'm not used to looking at AUD and ZD, but it seems like when there is no impulse, it's quite efficient or balanced in pricing. There's wicks, there's big wicks, right? So let's take a look. This is equal lows, right? There's liquidity below, which we came and tapped in already, right? So if I just extend this, right, we did run this liquidity already. So potentially this could be that run of liquidity below these equal lows, right? And continuation with our higher time frame bias or structure, right? Remember? So by looking at the 4 hour, yes, the daily time frame was saying something else. However, this is an actual break of structure, okay, on the 4 hour time frame, and I'm gonna factor this in as a bullish shift in market structure, okay? Why? Because the higher time frames are pointing to the upside, right? We're somewhat in a corrective move. We can clearly see the strength in momentum is much stronger to the upside than it is to the downside. When we look at, you know, this impulsive move, this impulsive move, this impulsive move, this whole corrective move, except for like these movements here, right, which are within an area of accumulation or distribution, right, there was no huge momentum or impulse to the downside, right? So we're in a much larger area of consolidation, right, where we're generating order flow. Okay, this would make sense for markets to kind of shift and continue to the upside. However, that doesn't mean we're going to take buys right here and just put stops below. It's a wait and see type of scenario, but we're going to dig deeper, okay? So let's mark this out. Okay, I'm not a Wyckoff specialist. However, I've seen some of the schematics, right? I see people, you know, talking about it, using it, and just in general, I understand a lot about it. Okay, and what I see here, this is the run of liquidity. Okay, shift in market structure. So things for me, I would much rather favor the upside, right? So if I start seeing some break of structure to the upside on the lower time frames, if I would trade this pair, this is something that I would take in to, you know, position myself. Okay, I'm just gonna remove this. I'm gonna mark this out as an institutionally funded candle, since there was a manipulative move to tap into that liquidity, take retail traders into selling, and price moved higher than the actual highs. So institutionally funded candle moved up, came back here. Okay, there's a set of equal lows over here, equal lows. So that's why, again, I'm not looking for buys necessarily. We're in a huge range. We could run liquidity below here and then start breaking structure to the upside. Then I would be interested, you know, in buying, because we know that we have one last run on that liquidity below these equal lows, potentially continue to the upside. So this is the 4-hour time frame. There's a little bit of imbalance over here. Let's mark it out, so we could potentially push a little lower. This is a mitigation ray, H4 imbalance, top. It is somewhat of a valid, let's put this out, template, H4. Okay, this is a 4-hour area of supply or bearish order block. Why? Because this impulse here, right, broke this point of structure, even this one. So this is clearly bearish. This was a little pause in the market, and then impulse, which broke this low, creating this area of supply. However, since we are in a consolidation area, you clearly see impulse to the upside, bullish break of structure, then impulse to the downside, bearish market structure, right? It tends to give conflicting signals on, you know, market structure basis. So we're aware of that. However, this still is a point of interest, right? 1.07588. We can go and highlight it. Coordinates 5. Let's do 5 0, just 5. Actually, no. 588. 1 hour time frame. Much cleaner. Okay. So there's a lot of price inefficiency here, which strengthens, you know, the strength of this 4-hour order block. We can go and refine it on the 1 hour, just like that over here. Okay, this could save you, you know, a few pips, tighter stop loss, higher risk to reward. Okay, there's about a 2-pip difference. And then lastly, let's, yeah, so before we look at, you know, that continuation on the overall higher time frame picture, I see this equal lows, you know, liquidity below. I see this point of interest. There is obviously higher points of interest. We'll identify them. But overall, I would like to see a run of liquidity below these equal lows, and then breaks of market structure to the upside to tag along, you know, the upside. However, higher time frames are still looking bearish. The market structure is bearish. We need, you know, a lot of price action development on the lower time frames before we start seeing that shift on the higher time frame. Okay, so remember, this whole area here, if you forgot or just joined the stream, this is the higher time frame on the weekly time frame. This is the 61.8 retracement and the 786, and of course the midpoint, right, on the weekly time frame. You can see how many times we've been tapping into this area, even spiked below it a little bit. So this could potentially be that turning point we're looking for on the higher time frames. However, it's going to take time. It's going to take just time to shift on the 4-hour. It's if you see the weekly tap into a point of interest, you're not going to see the 4-hour or the 1 hour just tap and fly to the moon, right? It's not how it works. There's a lot of candles, right? There's a lot of, let's say this here, 1 hour candles in one weekly candle, right? So just understand how price develops from a lower time frame perspective to a higher time frame perspective and vice versa, right? This will help you extremely a lot. So it's a lot of price inefficiency, right? The reason why we're not highlighting this point of interest here is because this 1 hour order block is within our 4 hour point of interest. Okay, however, I'm just gonna go and highlight that there's a little bit of price inefficiency that remains below here. However, price seems to have mitigated and moved lower by breaking structure to the downside. Okay, so oops, let's highlight this 1 hour H1 imbalance. And there's no point going any lower really, since it's, yeah, so there's no obvious refinement to do on the 15 minutes. This is pretty much it on AUD and ZD. So if you're following, the whole idea here would to look for some of retracement here to fill this inefficiency, potentially push lower one more time to grab liquidity below these equal lows, and then push higher. Okay, obviously it's not going to go up like this. There's going to be, you know, some price developments, some structure being created. Okay. However, yeah, I could see price filling this inefficiency here. This could be something I would consider, since we have momentum to the downside here, and the moves to the upside are quite corrective compared to the momentum to the downside. Right, so the last momentum to the downside was clearly this move, and then if we see a highly corrective move back to this point of interest, then this is something we could look for. Okay, so just an intraday idea would be a corrective move, you know, back up here. Okay, and then a shift in market structure, and then a push down to tap into this liquidity below, right? So this would be something we're looking for, you know, potentially equal highs being created. This could be equal highs being created below the order block. Okay, this would be a drawn liquidity, and then this shift in market structure, momentum back, you know, being bearish, retracement back to the point of origin, and then move to the downside. So this is it on AUD USD. Just give me a second, guys. I need to send a text message. But if anyone wants me to cover a pair, I'm requested in the chat. If not, I'm gonna go over GBP JPY, and I'm gonna end the stream since we have been live for about 50 minutes. I tend to just let them go for about an hour. 15 minutes. All right. So no requests, no worries. So we'll go to GJ. Okay, we grabbed a killer trade on Thursday. Okay, you can believe it or not. You can go through my journal, you know, on Telegram or my Instagram, but this was the actual trade we caught. I shared this specific setup with one of my private students. However, the Telegram group knew about, you know, this point of interest. At first, it was around this area over here, but then price didn't shift in market structure on the lower time frames. However, as soon as it shifted, right, to give us that confirmation to look for sells, I did send it out in the Telegram group. The link is in the description if you are not part of that community, right? It's completely free. I would like to believe that I provide some value. So yeah, there's absolutely like no drawdown whatsoever. Let's just go to the 1 minute time frame just to show this. This is no joke. Okay, this was the actual entry, and then we reached about 3 times our risk, and then the remaining position, which was just 25%, closed that break even. Okay, now let's move on to the weekly time frame. So I remember speaking about GJ a couple weeks ago. Similar thing, right? This was our last impulse to the upside, right? What I do on one pair, I do repeat on any other pair. So this is our weekly structure low, weekly structure high. We were in a highly, sensitive area where price reached a highly discounted price within our favored fib zone. And then a lot of people would have looked at sells because of this bearish candle, right? Typical retail trading, point of view. However, we weren't fooled by it, okay? And this was the previous 1, 2, 3 weekly candles breaking above this weekly high. If you're just curious to see how many pips this is, right? This is no 10 pip, grab or 50 pip grab. So if you position yourself, let's say from these lows, okay, to these highs, this is about, 500 pips, all right? You can guess how many opportunities there were to buy, to tag along this move to the upside, right? Yes, we took a sell on Thursday because we're intraday trading on that. But if we have a buy opportunity, of course, we're going to take it to go with, that weekly momentum, right? So anyways, I'm not going to go back through the whole weekly analysis because it gets repetitive. So I would just recommend you guys to watch the previous market commentary. And if in the previous market commentary, I'll just skim through this, go to the original one, just keep going back to the original market commentary. You can learn so much just from those market commentaries. Like, sure, I spit out a lot of knowledge and material and concepts and topics, but that's up to you to puzzle, right, and figure it out. Unless you reach out to me personally, you want some mentoring or anything like that. It's not something that I publicly, advertise, but people that do want to, learn from me, I appreciate, like, I highly value people reaching out to me. Okay, so let's make this quick. So I feel like I lost some of the crowd. Okay, we still have this daily imbalance point of interest. Okay, from, this is an impulse, pause, impulse. We can potentially see after tapping into this buy side liquidity, right? Maybe a potential corrective move down here for continuation. This would be ideal since we still have a lot of imbalance here. Okay, overall, like, the weekly time frame is extremely bullish. Let's mark out our weekly structure low. Not our weekly structure low, sorry. So where is it? This is our previous weekly low. Okay, so this previous daily low, I'm just gonna change this as PWL, previous weekly low. So I'd really love to play within, that range. This is obviously the previous weekly high. So just like how I identify the previous daily high, previous daily low, right? We can do exactly the same on the weekly time frame. If you understand like how the weekly candle is being created when you go down time frames, okay? So let's go previous daily high and then change this to PWH. Okay, so we can see price, is somewhat consolidating. That doesn't mean we're going to sell, right? If we can see some grab of liquidity and then momentum to the downside, yes, we're going to aim for this imbalance, tap into this 4-hour and daily order block, mitigate all of this stuff. Potentially or favorably, I would like to respect the previous weekly low, right? So technically, if we're seeing strong momentum to the upside, let's go back to the weekly, right? Can you see this weekly candle? The lows here was respected. Same thing with this week here. These lows were respected. So I'm just expecting these lows to be respected at the very least. It could come extremely close. This would be highly discounted price for a continuation to the upside, which would be a great setup for us to take. Is it going to reach there? Maybe not. I don't know. But we just go with the flow, right? Whatever happens on a daily basis, we take in that information and we act. Okay, so this is the daily. Let's go to, let's hide this. Okay, so we can see our last break of structure, okay, was to the upside over here. Bullish break of structure. We're somewhat failing, you know, to break these highs. This could potentially be, you know, a high being created and then price potentially pushing lower. If that's the case, this would be a point of interest. Some people might see this as like a head and shoulders, right? So this is the right shoulder, somewhat of a neckline, you know, the head, the right shoulder, potentially, you know, this is what we're looking for. However, if you understand those patterns, okay, it's all based on market structure, right? So this over here is a bullish break of structure, and then if you get this break, right, this would say or mean that we're breaking structure to the downside, giving us bearish market structure. That doesn't mean we're going to go and sell on the neckline. No, we don't do that retail stuff, right? We study price, we find areas of liquidity and inefficiency, and then we execute in areas where price is highly sensitive to. We're not looking at horizontal lines or anything like that, unless it's, you know, a point of interest like the daily imbalance, right? So the idea here, we're in a consolidation. We're extremely bullish. However, we could potentially see, based on the higher time frames, a retracement. There's a lot of reason and cause for price to move lower, right? So we have this identified, right? There's a set of equal lows here. We're going to extend this, okay? There's sell side liquidity there. So this is something we can tap into to continue to the upside if price chooses not to go all the way down here, right? So we can react off of potentially this point of interest here, okay? Because if we look any lower, we have a little bit of price inefficiency down here, okay? But they're not significant. Like this is significant here, right? Price inefficiency, that's something of interest. I want to go back to the 4 hour to see. Yep, this will be a point of interest. So you see big impulse, low candle, you know, somewhat of a pause in the market, and then big impulse. So price will be sensitive to that area. Like, I'm almost convinced, right? It doesn't mean we're going to get a full rejection, 300 pip move, but we will get some reaction, right? It could be just that and continue, right? Whatever. I'm just saying this is going to be a highly sensitive price point if we do tap below this sell side liquidity into this area. So let's identify this as H4 imbalance. Make this 11. 1 hour. We can see how clean this is. I'm gonna keep it as a true order block. Okay, 1 hour time frame. And I'm actually gonna put a alert at the, oh, it's already there. So I already have an alert at the sell side liquidity. So once we start tapping into that area, I'm gonna, you know, assess the market, assess what's going on, and make a trading decision. Okay, GJ's pretty clean, right? Given, you know, this consolidation, there's some clean price action within it. So we'll see if you know, the daily order flow on Monday is bearish, right? We can look for the sells to tap into this sell side liquidity. This is reason and cause for price to move lower before moving higher up, right? However, we know on the daily we're slowing down with you know, the previous order flow or momentum to the upside. So this sums up GJ. I would say, yeah, there's a lot more cause and reason for price to retrace from where it's at right now. And if I zoom out, right, we're in somewhat of like no man's land. We're going to move higher. We're going to tap into this buy side liquidity here, which is a long way from where we're at right now. But we'll just leave it there, okay? And before I call this a day or a night, since we are nighttime here, I'm going to, since we have a new impulse, okay, oopsie. This is your weekly structure low now, okay, just a minor little refinement. I'm going to remove this here so we know this is the daily order block, which we tapped into to the dot. To be fair, if you're trading higher time frames, right, because you might be super busy with a full-time job, or you might be an entrepreneur yourself and working on different business ventures, right, you will get a lot less trading opportunities. However, the moves you're catching are fucking like insane. And if you're just, you know, setting your orders, forgetting about them, right, you can catch these type of moves. Like, this is insane. If you just wait for this daily order block, stops below it, right, and you aim just to the previous highs, is a 3.85 risk to reward. But you know, target, let's say our actual full target, you know, it's up here. There's very minimal effort in here, and you can catch great trades, right? And this would align a lot with my motto, right? I always say less is more. The less you trade, the more you'll actually make. It sounds counterintuitive, but trust me, the more you trade, the more likely you are to make a human error, an emotional mistake. You're human, right? You are prone to make mistakes, and one mistake could cost you so much. So this sums up the stream. I want to say thank you for those who participated. If you haven't liked this stream, like it. If you're not subscribed, subscribe. But don't just subscribe. Click on that notification bell so you know next time if I go live. Right, I don't really schedule my live streams. I tend to drop a message in my Telegram group. However, if you want to block out the noise on different Telegrams, whatnot, just tick that bell so you know whenever I'm either posting a video with, whether it's a trade recap or an educational webinar, or if I do go live, you'll be notified and you can jump in, participate, and just get all that value that I provide. Okay, so once again, thank you very much. I appreciate your support.